On to your markets news now. Asian stocks were mixed but mostly lower in today's session, largely taking their cues from Wall Street's performance from the previous day. This as US bond yields rose on cooling expectations that the US Fed would cut interest rates more aggressively. The Nikkei share average declined by 1.4%. The Hang Seng index rose by 0.1%, while the Shanghai Composite Index ended the session up 0.54%. US markets vacillated between losses and gains, only to end the session mixed, with the Dow and S&P 500, which had good all-time high runs last week, closing in the red. Market players are primarily continuing to eye the US corporate earnings season, while also mindful of the simmering tensions in the Middle East and the upcoming US elections and what the implications of their outcome will be. The Dow Jones Industrial Average declined by 0.8%. The S&P 500 closed down 0.2%, while the Nasdaq Composite Index bucked the trend, ending the session up 0.3%. The JSE is currently weaker, with the all-share index falling by over 1%, currently around 86,181 index points. The rand is trading at 17.56 against the US dollar, 22.85 vis-a-vis the British pound, and 19.01 against the euro. Looking at the commodities, gold is trading at $2,737 an ounce, platinum at $1,021 an ounce, and the price of Brent crude oil is at $74.95 a barrel. Makwe Masilela is the Chief Investment Officer at Makwe Fund Managers. Makwe, thank you very much for joining us. So market players are having to consider an awful lot. There's the US elections, the Middle East situation, and even speculation around the Fed's next move in terms of interest rates. Your thoughts?
Yeah, and on top of that, you have to deal with what is happening with the earnings, given that valuations are very stretched or they are far more rich. So we had to get the numbers that will justify the current rich valuations. So yes, on top of those geopolitical tensions as well, what is happening in Russia and Ukraine as well is Middle East, markets still have to deal with the valuations of the companies. But yes, the US elections continue to play a crucial role when it comes to market sentiments, given that elections are happening in the next 2 weeks or so. And also we know that data will tell us what to expect when it comes to interest rates going forward. But it gets more frustrating when you get Fed officials also confirming that, hey, we have to start dialing back our expectations when it comes to the how deep the cuts will be going forward.
Yeah, our local market doesn't really seem to get that excited when we're expecting data. But of course, we've got inflation coming out this week. And I wanted to find out what is really the main mover on the markets. I see that the resources tend to really swing how our markets perform on any given day.
Yeah, the past two sessions, we've been seeing our resources helping us very much so. But today we can see resources are down, but not as bad as our financials and industrials. And we're getting a cue on what is happening internationally. And it's all because of what is helping with the yields, as you said in your intro. And the yields are saying to us, listen, the US data continue to be resilient. And the inflation numbers that we've seen from the likes of Germany shows that at least inflation continues to go down. So meaning we can still expect some rate cuts when it comes from the likes of the European Central Bank and also from the US itself. And when we see data being resilient, which is supposed to be good news, it also tells us that now we have to start not to expect more serious deep cuts when it comes to rates going forward. And markets, remember, they were excited that rate cuts will continue to be deep.
Yeah, so on a bigger picture note, of course, there are two major meetings that are taking place. In Washington, D.C., it's the former Bretton Woods institutions, the World Bank and the IMF. And then on the other side, in Russia, it's the BRICS meeting, with Russia wanting to prove itself and wanting to sort of say to Western nations, I'm able to manage without you type thing. From your vantage point as a markets man, what are you looking to come out of those particular meetings?
Starting with IMF and World Bank, we expect to see the debate when it comes around the low growth and also this whole issue about debt. Already IMF has told us that by the end of this year, the global debt should be around 100 trillion US dollars. That's almost 93% of the GDP. And also now, when it comes to the likes of the summit, when it comes to BRICS, remember those countries, they account for almost a third of the global economic output. So one cannot, overlook them. And other than them getting some support from the BRICS members, that is because of the standoff that we know with the West, we expect them to come with some serious economic conclusions that going forward, how are they going to help each other, especially dealing with this low growth and also with this huge debt that most of those countries are facing.
So Sasol released a 3-month ended September production and sales report, what they call their first quarter of 2025. It looks like their fuel and their chemical businesses experienced substantially declined revenues, and they're attributing, of course, the current macroeconomic situation to their current woes.
Definitely. Look into Secunda when it comes to production. Fuel production down 11% because of the quality of coal that side, and also because of the non-availability of equipment, and that unfortunately had a serious disruption. And we know that the net freight was also affected by shutdowns. But you look into a stronger rand, you look into volatile oil prices, and also lower refining margins, then it is expected that will affect the business negatively. And the chemicals market continues to be oversupplied, and unfortunately prices are not good, just like demand that side. So that's also negative for them. But gas produced from Mozambique, it was up 1%, even though there were some planned shutdowns. And also when it comes to mining production, it was just down a mere 1%.
Very quickly, We Buy Cars, they came out with their trading update for their results for the year ended September 2024. Of course, it's not that long ago that they listed or were spun out of Transaction Capital. But what do their numbers tell us? Because I saw some positive numbers and some negative numbers. So just tell us what you think, how you think they're doing.
When you look into their core headline earnings per share, it's up only 26%. But what we usually use as markets, we're looking at headline earnings per share, which are down 65%. And that's an indication that that industry continues to struggle, as we've seen with some of their competitors, but they're at least able to be helped by their service and equipment divisions.
All right, Makwe, thank you so much for your time and insights as always. Makwe Masilela, he's the Chief Investment Officer at Makwe Fund Managers.